Hey everyone, thanks for joining the session. I'm Wayne, a partner at Signify, and I help with the early stage fund. And in case this is your first session you're attending, by way of very quick introduction, Signify is a venture fund built as a tech company with a large team of data scientists and engineers building products to not only streamline our internal operations, but empower our portfolio companies as well as angels and advisors we work with. So we think of ourselves as trying to solve the diseconomies of scale problem that's fundamental to venture, where it's sort of, it's difficult as a traditional asset money manager to support 100 companies in a portfolio. We also borrow best practices from network-centric models that kind of unbundle the classic one-to-one partner relationship between VCs and founders, where we aspire to kind of match the exact right set of expertise for founders' very specific pain points, which is very hard to find, of course, in any single venture capital partner. And I think a really interesting trend that kind of ties into that is the Alumni Syndicate model, which of course itself has a lot of natural scale advantages. And it's a model that kind of cuts to the heart of how Silicon Valley's innovation engine works, where talent hubs spawn the next generation of startups, most famously, of course, with the PayPal Mafia, which led to Tesla and LinkedIn and SpaceX and others. And it's exciting to see the next evolution of that institutionalized through alumni syndicates. So I'm excited to help moderate a conversation on the topic with the intent of really teasing out insights relevant for angels who are looking to either get involved with syndicates or start their own. And so we're going to do that in discussion with some awesome experts here, which are panelists Chris, Ankit, Dan, and Lenny, who are innovating broadly within this model, focused on two of the most prominent talent hubs in Google and Airbnb. And a quick note on logistics: we're planning about 25 more minutes of conversation, which I'm sure will fly by. But we want this to be as interactive as possible. So if you have questions, feel free to type in the chat, and I'll do what I can to read them. And if we don't get to them, we're going to send a follow-up with everyone's contact information, and I'm sure everyone on the panel would be happy to hear from you afterwards. So with that, I'd like to quickly introduce each panelist. I'll start with Chris and Ankit, who run the Xoogler Syndicate. As the name suggests, they invest in startups exclusively founded by Google alumni. The syndicate's backed by about 1,800 LPs that have invested in 40 startups. It's about 9,000 members strong at this point, helping startup founders in many cases, before they even leave Google. And they host about 300 events and programs a year, which engage the community, including managing an active Slack channel as well. We're also joined by Dan and Lenny, who lead AirAngels. AirAngels is an Airbnb alumni investor syndicate made up of about 200 alumni, including the ex-COO, CFO, and CMO of Airbnb. And companies get access to the entire syndicate for advice, distribution, and for potential hiring pools. And they invest typically about 100K to 300K. So with that said, we'd love to kick off with a bit more detail from each of you on why you decided to raise an alumni syndicate in the first place. I think it's always fascinating to kind of hear directly a little bit more about the origin story.
Sure. Yeah, I can just kind of talk through the process. It's actually pretty simple, but it's important to think about it strategically. So the steps are basically pick who's going to start it. And a lot of it, I think, comes down to who's just like motivated and has time to do it. It's the kind of thing you don't want to like overthink and have too much, voting. You just kind of do it is kind of what I found works. Then two, you just start it on AngelList. You go to I think it's angellist.com/syndicate, and then you create a syndicate. It takes a couple minutes. And then the next step is where it gets a little harder. What we did is we picked a few, maybe like 20 core people that we wanted in the syndicate that we think would draw in additional people. So we kind of made a list of just like our wish list of early members to the syndicate and started pinging them and asking them about joining. And once we got about 20, maybe 25, more people started to get excited because it was like, oh, wow, your ex-CMO's in, and this director is in, and this VP is in. And then it's just a matter of getting to a point where you think you have enough money for the first deal. That's kind of, I think that's a milestone. And if you want to add anything, Dan, feel free. But basically, it's just like, do you have like 100K budget that you can do your first deal and feel successful on? And that's kind of the big milestone we focused on initially.
Thanks for having us. The idea was really simple. Former colleagues that I worked with, Lenny, Brian, and Rehan, we were just thinking it'd be really fun to look at startups and invest in them together, because after Airbnb, everyone had gone on to do really fun, interesting things. And we just said, hey, let's just create a group to share investments and evaluate them together and see if we can help each other. And then we thought, hey, why don't we put this on AngelList and see if other people may want to invest in companies that we're finding. And it actually kind of just took off from there. And we found that it's been really fun and just rewarding to work with all of our ex-colleagues from Airbnb. And we're working basically on finding, helping, and investing in the next generation of companies, whether they come from Airbnb or not.
Great. And how about you, Ankit and Chris?
So yeah, I mean, composition wise, we as kind of like we said earlier, right? It's we invite all the current Googlers to join the program, and also all the ex-Googlers. So the advantage we had was we were running this community, and then we started the syndicate. So we already had a lot of investors or like people who are interested in startup ecosystem who became part of the LPs, and also we kept in ties with a lot of people who are like planning to leave Google, and they also ended up joining the community. So to a certain degree, even today, we have some people who are current Googlers also part of the community. They are like people who are like thinking about doing their startup, and we are able to help them from the beginning from there. Anything else, Chris, you want to add?
Thanks, Wayne and Signify for having us here. It really came about from a demo day that we help host at Google's campus. So I spent 8.5 years at Google, Ankit a few years as well. And when we went back in 2016 to host a demo day on Google's headquarters, there was one startup that we found that we wanted to really invest in, the community invest in them. And we worked with AngelList to invest in this one company. This company has subsequently sold it back to Google, but we realized a lot of people wanted to be helpful to ex-Google founders, and it was through this community, as Wayne had mentioned, where we do many events, that we actually are able to find a lot of founders before they even leave Google. And so it sort of came out from the community. That's where we started to actually create this syndicate. A lot more people joined, and from there we wanted to be able to partake in a founder's journey. And what we found is when we actually invest in a startup, it actually is a great indicator to other VC firms and other angels to actually also invest in them. And that's where we want to be the most helpful partner for an early stage Google's journey into starting companies.
Great. So I'd love to sort of cover, I guess, the various facets of running an alumni syndicate, maybe starting from the first thing that you need to do, which is recruit investors to join the syndicate and so forth. So I'd be curious to hear from each of you on what that process looked like for you, how that process differs from sort of maybe a classic venture fund. And of course, I think the investor base for an alumni syndicate can be a very strategic lever for you in community building. So we'd kind of love to unpack the way that you thought of that. Maybe I'm starting with Dan.
We asked everyone before they joined, how much are you thinking about maybe investing in startups or in a given startup, just so we could maybe know if we had enough to start. And then I would add that the hardest thing was knowing when to actually start. Like, I think we were not sure. And then I think you just got to take a plunge and try and make an investment in one company. And hopefully all the backers who told you that they want to invest are actually going to. That was probably the most nerve-wracking moment for me, was, are people actually going to want to invest, even though they say they do? And then, it's been off to the races since then.
Yeah, similar to Dan, that's probably the most nerve-wracking, whether people invest even though they're most interested. I think what we realize now is we do ask a founder to provide us with a certain dollar of allocation that we know we can fill. And now that we have 1,800 limited partners, we can fill those amounts that we're asking for. But we started a bit differently from the syndicate. There was this individual called Ethan Beard who was in the crowd and the audience of the first demo day that Ankit and I didn't know back then, but he had been at Google for 4 years, then Facebook for 4 years running the Facebook platform, then joined Greylock as an EIR, and he had made 60 investments himself. And so through that, we realized that, why don't we partner together so there was at least one startup we wanted to invest in. And through that, we launched on AngelList. We realized people wanted to invest in that one startup founder. That startup founder had sold his first company to Google, which became Google Lens, and invest in. So from there, we realized that it worked, and more people wanted to invest in these companies, and our fantastic founders, which had worked at Google, The recent ones that had exits include Wish as well as Affirm, and the prior ones was Pinterest and Instagram. And so with that pedigree, we realized a lot of people wanted to get in early to invest in such founders.
Yeah, I'd love to ask a follow-up question that came up, I think, just a few minutes before we actually started this session around the composition of your investors. I know with you, Chris, you know, you've thought about, you know, do we exclusively bring on Google alumni or not, and sort of, you know, how do we kind of define that affinity or affiliation? Can you comment?
Yeah, I think maybe that's one thing that maybe has stood us apart a bit, and it really wasn't like super intentional or deliberate. We just, it was. Sure. Yeah, you're right. We decided from the beginning to just let in folks who worked at Airbnb with us, just because we knew the people, and then we could tell someone that we were going to work with or invest in that we actually know everyone that's part of the syndicate. We do sort of think about whether to open it up from time to time. There's, I think, 600 people who've applied on AngelList to back our syndicate. We've only, you know, and they're not part of Airbnb, so we've kind of just said, hey, for now, like, you know, we'll get back to you. We've got about 200 people who have joined, and I think there's something nice that we can tell to folks that we invest in or work with, that, hey, we know everyone individually. We've worked for them, or we know someone who's worked for them, and you're keeping it within the Airbnb group. But there are benefits, I think, to opening it up. You know, frankly, more money available to invest. We just haven't gotten there yet. Anything else, Lenny?
I think that's the main difference between the Airbnb and the ExGoogle syndicate, where we sort of a flip model, where for Airbnb, they only take in Airbnb alums or current people at Airbnb to be investors and invest in any company, Airbnb or not. On the ExGoogle community, we've decided to allow people who aren't at Google or are Xooglers or have no affiliation with Google but want to invest in ex-Googlers, and we only invest in ex-Google founders. And I think the reason for that is we feel that we can do better due diligence and get better access to deal flow, because we can make faster and write faster checks because we've worked with these people or know and what backgrounds they've had, and so we can more easily back them. So that's a big difference, and not that one is better than the other, but that's just different strategies that all of you need to figure out what would work for you.
Great. Anything to add there, Dan or Lenny? Have you also kind of kept the syndicate exclusively focused on alumni?
Just add a thought here. I think this is important because as a syndicate, as an alumni syndicate, one of the main reasons to do this is it's a differentiator for you to get into deals and to give you something to talk about for why they should let you invest. So part one of that is just like, oh, you're part of this brand of a really great company, and clearly you knew what you were doing because this company ended up being successful, so we're going to let you invest. The other is, who are your backers, and using that as a differentiator. And so a lot of syndicates start with being just the alumni and then end up expanding to everybody, and so you start to lose that differentiation. So our feeling is it's important to keep that, and so that's why we've done that for now.
Yeah, it's an interesting strategic trade-off as you scale and you're thinking about kind of maintaining the depth of affinity within the group, as a leverage point. I'd love to move on to a bit of the syndicate investing strategy in more detail as it relates to, you know, how you think about your bite size, the number of investments you make, and I guess portfolio construction, if you will. And then maybe as part of that, I saw a question come up just clarifying the economics of how the syndicate works for you. Maybe we can kick off with Chris or Ankit.
Sure. So as an introduction happened, we made about 40 investments. Our bite size in terms of check sizes has been between $50,000 and $250,000. Most of them are in the first money in. Sometimes we also do follow-up funding as well in there. It's across the board of types of startups. Given Google's pedigree and what people have worked on, whether it's machine learning startups, consumer, enterprise, we definitely look at all factors. But in terms of portfolio construction for the syndicate, it's very different than an actual fund. So in the syndicate, we allow people to invest as low as $1,000, since we want to give people the experience of investment and the opportunity to invest in these startups, and they decide on a deal-by-deal basis whether to invest in, whether to the amount they put in was $1,000, and the largest amount we've ever accepted was $170,000. And so it just really depends on the individual how much they want to put in as well. So Ankit, you want to fill in the blanks for other things that?
Yep, cool. And how about you at AirAngels?
I'll take this. So we've done about 14 deals now. We started last February. We put in about 100 to 300K usually, partly because AngelList has this flat fee they have to pay for every deal. And so if you do below 100, just kind of is a very expensive part of the deal. And we support, what's interesting about a syndicate is you basically are steward for other people's desires for what they want to invest in. As much as we want to do certain things, we have to make sure people are getting what they want. So what we've been finding, kind of our Venn diagram of ideal deal is a top tier fund is leading it. It has a strong mission that we all believe in and we think is good for the world. And then as much as possible, it's an Airbnb founder that started the company. And the more checkboxes it checks, the better. And then we try early stage as much as we can. Is there anything else you want to add, Dan?
No, there's no, it's because it's SPVs. So for each deal, we raise a new vehicle. There isn't any thought really on portfolio construction per se. And in some ways, we're also limited by how excited or not excited people are to invest in early stage tech startups at any moment. I think one interesting thing for me when I look back, we started last year in February, March, when the stay-at-home order hit and kind of COVID really became like front and center, was actually our busiest time. I think we did one investment per week in our first 4 weeks. And we thought, wow, that's crazy. The markets are going down, but it actually was the opposite. Yeah, it's interesting. And because it's not a fund, it has some trade-offs, and we're thinking about, how do we maybe address some of those in the future?
Yeah, on that point, are you finding within your specific alumni networks that you're finding a natural concentration of business models or sectors that alumni are pursuing, which you kind of organically are specializing in, or has it been pretty generic?
Yeah, I think for us it's been fairly generic, I would say, but it also follows a lot of market trends. For instance, in the last 3-4 years, certainly we've seen a lot of like AI-related startups that are coming out of Google. I think certainly we see more technical startups like core tech, high tech kind of companies that do come out of Google. And I think that probably also boils down to the fact that like a lot of them are actually coming from Google engineers. But like we've seen across the board, like we've seen startups who are doing like very consumer marketplaces, those kind of things as well.
And Wayne, the only thing I'll add in terms of portfolio construction is we try to avoid as much as possible any competing companies. Again, with any early stage investments, some of the startups may pivot to the competing area, but that's the only portfolio construction I'll add. To follow up on that, the best funded autonomous vehicle type of companies, Neuro, Aurora, they came from Google because they came from Google's self-driving cars unit, right? One of the first big companies that really invested in that space. So it's just natural that the ExGoogle community has spawned those type of technologies and companies. So,
yeah, are you seeing that as well at Airbnb with maybe a focus towards consumer marketplaces or so forth, or not?
To me, the funniest thing is that we've invested in 0 travel companies, and I think it's because people know how hard they are and they avoid them. And also few marketplaces. I don't know if we've done any. So I think we know too much about how challenging these things are.
Yep, that makes sense. And I wanted to pick up on something Ankit mentioned around leveraging the network as it relates to the diligence process. Could you all double click a little bit on the process of vetting deals and making investment decisions? And I'm sure a lot of it relies on kind of the expert network that you've cultivated.
Yeah, I would say for us, one really cool thing, I think this is similar to the ExGoogle network. So many people have gone on to work at really cool companies next across different industries and categories. And so it's really easy to tap into someone who's an XYZ company to get their feedback really quickly on a new investment opportunity, which has been pretty amazing. And then lastly, what we found too is a lot of investors have been really excited and interested to work with our community. And that creates another group of people who have sort of been really willing and helpful with their time to answer questions for us quickly. I'll add one thing that we've done. I think you didn't ask this, but I think it's pretty interesting. We've tried to actually educate our syndicate on being like how to be an angel investor, because there's a lot of people who early at Airbnb, for example, now may have the means to invest but haven't done much of it. And so we've been inviting really cool investors to come talk to us. And so we're helping everyone learn how to angel invest, and then that gets them excited to angel invest, and then it helps those investors get excited to sort of work with us more. And so we're trying to create these, I guess, loops or cycles. I don't remember the exact terminology. Flywheels, yeah.
Yeah, I mean, I think additionally, we kind of like already touched on it a little bit earlier, where in terms of due diligence, another advantage we have is there's a lot of overlap. Typically, any ExGoogler, we will be able to find a lot of people who have worked around with that person. So like with that network, we are able to also get a lot more understanding of like how well a person is like capable of like running and making something big. So we are able to do a much more interesting due diligence than many of the other investors in the valley would be able to. So, and additionally, like I think many of the people who are backers are also people who actually know these founders personally, and that also makes the decision a lot simpler and easier for us.
One quick tip. I'll just throw out one quick tip. Just if you're like, what's one thing you could do to due diligence a deal you're thinking about, is just find somebody that would buy it or use it, and just ask them about this thing and see how excited they'd be. I think that's a nice little heuristic.
There you go, the marketplace terminology kicking in. Chris and Ankit, I know you guys are also, passionate about this topic of, educating folks to become angel investors as well. Do you want to share a bit about what you're doing there?
Sure. So when preparing for this larger audience, we ran a Xoogler event, as we stated at the start at Wayne. We have over 300 events. So we had one yesterday. To make sure we drew out the best questions to be able to answer here. And we had over 100 RSVPs for that event specifically, and all ex-Googlers and a few Googlers. And quite a few of them were interested in setting up syndicates themselves. I think the bigger topic within the VC space is that we want to be able to invest in different founders of different backgrounds. So what best way to do that than empowering a lot of people from different backgrounds to become VCs? And one way to start that is for them to become angel syndicate leads. And so that's what we're trying to do. I'm sitting here at a university. That's where I'm in this setup. And we're partnering with them to launch a course that's for credit to actually educate people to be angel investors. So that's one. Two is, as we have a fund structure as well, we want other syndicates to form as we want to co-invest with them. That's the best way to really find and work with a lot of interesting people and find interesting deals to support founders. And so educating more people to become angel investors or running syndicates themselves would allow all of us to be more successful as investors, as we stated. And I think all of us here actually want to help founders, and really setting up more of these structures, allowing more founders to be started and be funded more quickly. So that's how we're trying to think about how to be helping more people to become angel investors.
Mm-hmm. And maybe as a preview of some of that, that content and great work you're going to put out, would love to hear from you folks for the angels that are on this call, how you recommend they kind of do their own due diligence, right? As on companies that are beyond sort of just the information that's shared with them by syndicates. How would you recommend, particularly for, I think, initial, angels who are kind of like learning the ropes as they're vetting syndicates like yourselves and vetting deals on a deal-by-deal basis? Any tips or best practices that you think will be helpful for them?
Don't do it. No, I'm just kidding. I'd say, I mean, we've heard from a few different investors and some of the themes that people have recommended to our group. Oh, feedback. Do you guys hear that feedback? Okay. I think some of the things that just stand out from advice we've heard from people is, invest in areas that try and invest maybe with other smart people, where even if you don't know, maybe you can kind of trust what they're doing. And if you're looking at anything where people from Airbnb could be helpful in diligencing, I mean, reach out to Lenny and I. We're always happy to help as well. But I think those are just a few things that come to mind.
Awesome. And I know we're running up on time, but what advice would you have for someone who's considering starting an alumni syndicate? I know you're all part of a very active Slack group with I think dozens of aspiring, alumni syndicate managers. Anything that, given your journey so far, that you would share as the parts to kind of watch out for?
The one thing I'll say is don't do it to potentially invest in the next Airbnb, right? Do it because you want to learn and actually perhaps access to great companies to be able to develop your career, maybe use that as a stepping stone to become a VC. But the process, there's more easier ways to make money. And to look at it to actually be helpful to founders, look at to learn the experience and to actually perhaps get involved in new technology. So if you use that mindset, you'll realize that it's actually a rewarding experience to become a syndicate lead. And as they said, just start it and do it.
I don't think we would be here or done as well if we hadn't gotten sort of advice and help from folks before us. So like Brian at the Lyft alumni group, or Will at the Uber alumni group, Chris and Ankit as well. So I think we have a document we put together. So if anyone's thinking of starting an alumni syndicate, please reach out to Lenny and myself. We'll be happy to help. And then that's I think how we just learn and just do it, try it. Like this was an experiment for us. It still kind of is. So I would just use that mentality too.
Same here. One other thing I'll just add real quick. Running a syndicate is a lot of work. We've talked about all the good parts, but it's actually a lot of work. So just keep that in mind if you're thinking about starting one. It's going to suck up a lot of your time. So quick disclaimer.
Yeah, I think the only additional last thing I'll add is, especially with alumni syndicates, you definitely get to know a lot more people in the network. So like try to figure out how you can like connect with a lot more former employees of your alumni network and just kind of like leverage that, figure out what they want, what they would want to invest in, and help them out.
Makes sense. So we're up on time, but thanks so much to our panelists for sharing their insights on the alumni syndicate model. It was super interesting conversation, and we'll be sending out contact information after. But any quick sort of calls to action from folks here, the panelists, before we jump on how folks can get very tactically where folks can find you, how folks can get involved. The ways that you like to collaborate and so forth.
So a couple of things, a contrarian view for what Dan was saying, and it's totally agree. Invest with really smart people. That's one way to make money. But two is know why they invested. I think early on we looked at who's really investing in it, and it could just be a personal relationship. It could be a neighbor. It could just doing a favor. So really double click into why did this person invest in, not just because it's a famous person and you want to follow on. So don't do that. Just actually really understand, as what Lenny was saying. Speak to customers, people who are buyers, to really understand the business itself. And if it's not an enterprise type of business or SMB, talk to users or talk to people like Lenny, who's a growth expert, if he thinks that it's a worthwhile company. If it's a marketplace or a growth type company, there's no one better than Lenny in that space.
I would say like just reach out to Chris and me. It's Ankit at Xoogler and Chris at Xoogler.co. And obviously, we are happy to help in any way. We are happy to collaborate on deals and also talk about like some of helping out on setting up syndicates.
Makes sense. Cool. All right. Well, thanks again so much. And as a reminder to the attendees, you can select the next session you want to join from the event space or the sessions tab in Teleseat. I think there's 2 sessions going on now on raising your first fund from an LP perspective and how to think about the next the stage of investment you focus on. But with that, thanks so much again for coming, and see you all at the next session.
Bye, everyone.